Okay, thanks for joining back. There was a power interruption, so it got disconnected. Okay, so we're discussing this question where the value of the land has been given and the value of the goodwill should be fixed at 45,000. That is what is being mentioned, right? So goodwill is fixed at 45,000. Now what do we do? Very simple adjustment. 45,000. You will take them in old profit sharing ratio to which partner? To the existing partner in the ratio of 3:2:1. So A, it's not A. I'll just just 45,000 in the ratio of 3 to 1. So 45,000 3 to 1 means 6. 45,000 divided by 6 multiplied by 3. So 22,500 here. Then 15,000 here and 45 divided by 6. 6 7 ja 42 5 7,500 here. This is the ratio. Now this is credit. Debit should be equally. Means what? 45,000 divided by 4. So 7,500. No, not 7,500. 45,000 divided by 4. So 45,000 divided by 4, we get 11,250. So 11,250 debit, 11,250 debit, 11,250 debit, and the new partner 11,250 debit. So first partner will get a credit, here also credit, this partner will be debit, this partner will be debit. So it may be possible that even the existing partner needs to be debited. Apart from that, all the adjustments are simple and straightforward. Now here they have done using sacrifice and gain, that is not needed. You can directly do in the table format, that is also equally acceptable. Okay. Apart from that, all other adjustments are simple. General reserve, keep in mind to credit to the existing partners, cash for capital, remaining all is same. Outstanding liabilities include 1750 due to Aman, which has been paid by Shyam. Necessary entries were not made in the book. So 1750 we have to pay to Aman. Who paid this? Shyam paid this. So what you will do? You will debit outstanding liabilities and you will credit Shyam because Shyam has paid it. So you'll credit Shyam and you will debit the outstanding liabilities. Okay. So what we'll do is we'll take up one actual exam question that will give you more confidence. So once you see the questions, you will realize that it is actually not very difficult question. Generally comes in question number 4 here. Here you can see. Okay, so let's see what is the tricky thing here. Question number 4. X and Y are in partnership sharing profits and losses in the ratio of 2:3. Balance sheet is given below. General reserve again to X and Y. Creditors, bills payable, salary payable. Okay. Building, plant, furniture, debtors, BR, stock and bank. Okay. On 1st April, they decided to admit Z into partnership, giving him 1/5 share in the future profit. So now existing ratio is 2/5 and 3/5. Now he gets 1/5. Now they have not told what will happen to these shares. That is what we need to calculate. Goodwill was valued at 1,20,000. The partners decided to revalue the assets and liabilities as follows. So plant 240,000, stock 242,000, furniture, bills receivable. 2400 is bad, 5% to be provided. So what will you do? From the total debtors 38,400, you will reduce 2,400. On the balance, you will provide 5%. Building is to be appreciated by 75%. So building 60,000 multiplied by 75%, that is the increase. Actual liability towards salary payable is only 1,200. So out of 2,000, it is only 1,200. So balance of 800 is your gain. Prepare evaluation, partners and balance sheet. Now here, what is the challenge? New profit sharing ratio. What they have given? They have given old profit sharing ratio 2:3. When nothing is mentioned about sacrifice ratio will also be in the ratio of 2:3. And what is the new profit sharing ratio? We do not know, and 1/5. So 1/5 is given to the new partner, means 4/5 is left over here. This 4/5 you will split in the ratio of 2/5, 3/5. So 4/5 into 2/5, 8/25, and 4/5 into 3/5, 12/25, and you have 1/5, right? 1/5 is 5/25. So the ratio is 8:12:5. Okay, 8:12:5. That is what is the challenging part here. Working note. Now, coming to goodwill adjustment, 24,000 and 60,000 and 140, how did they arrive at? So basically, $1,20,000 is the goodwill value of the firm, and 1/5 was his share. So this is my incorrect reading here. 1,20,000 into 1/5, you get 24,000. This also in the ratio of 2:3, because the sacrifice ratio is also 2:3. Now if you don't want to do that, you can do old profit sharing ratio, full goodwill, 1,20,000 in the ratio of 2:3. So 48,000, 1,20,000 divided by 5 into 2. So 48,000 and 72,000. And write off in the new profit sharing ratio, which we have calculated as 8, 12 and 25. So 1,20,000, 8, 120, 123 divided by 25 multiplied by 8, we get 38,400. Now if you subtract these two, 38,400 minus 48,000, if you do, you get 9,600. The same 9,600 is what is given here. Now here I unnecessarily, sometimes in a flow it happens. Sometimes in a flow it happens. Sometimes in a flow it happens. This was not required. Without doing that also, I could have directly credited in the ratio of 2:3, 9,600 and 14,400. Even if you do this, you will get the same thing. So this aspect, if sacrifice ratio is given, first calculate new partner or retiring partner share, and second distribute in gaining ratio. Okay, so if you look at the questions actually are not very difficult in the examination. With understanding of the concepts, you will be able to handle all these type of questions and highly scoring. Highly scoring, I'm telling you, out of 10, you can easily score 8 to 10 marks. Students, they unnecessarily get scared saying that, oh, partnership account, how will we handle? Goodwill, how will we do? That doesn't happen. You look at any past exam paper and tell me, sir, this question is challenging. I will, out of 7, 8 attempts, one or two cases you may see it is very challenging. Otherwise, it is not at all challenging. Keep your cool, keep your calm. It is easy to score 8 to 10 marks out of 10 marks in partnership accounting. Okay, so that is one thing what wanted to discuss on revaluation, goodwill, joint life policy, sacrifice ratio, handling of general reserve, handling of profit and loss balance, preparing partners capital account, memorandum revaluation account. Okay, so broadly we have covered important aspects related to partnership account. Now if you want to get comfort, there is one more partnership revision which has covered, where I have covered 3 4 more problems in detail that you can cover. Second, attempt the last 5 attempt questions. There are questions on death, admissions and retirement. Attempt those questions. You will get 101% confidence in the examination. Don't worry that it will be a very difficult question. You just go back and attempt those 5 6 years 5 6 attempt questions. You yourself will get absolute clarity. Okay, thanks a lot for your time. If you have any doubt for this, you can ask me. I'll take that questions. So no questions. If you have any questions or any question, specific question you want me to take, you can post it at our forums and we'll be able to handle them. Okay. Thanks a lot for joining in.